All right. Hello, 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 everyone. I am fired up and ready to go about this one. So, for those of you who are clicking on this video for the first time, my name is Kobe Cornell Boone. I am managing director and founder of Boone Capital. We are Reg D 506C registered private equity firm. We primarily focus on land, ranches, timber, recreational use properties, and all the beautiful things that we love here about the great outdoors. Man, I am super fired up about this video for a few reasons. One is I am excited about what's happening in the hard assets, as Blackstone calls it, or the tangible see, touch, feel asset space. I feel like for a while things kind of went different directions, and you know, folks starting funds and crypto and multifamily, all of that. Which has its place. And shout out to a couple of my good buddies who are doing well in that space. But for what I do, in the land space and the wildlife, the outdoors, those type of things, I am excited to see a lot of interest coming to our space. And I have to give kudos to the big, beautiful bill, 100% depreciation, and other factors that are really enticing to a lot of folks, your high net worth individuals, high earning W-2 folks, who are interested in exploring, what's kind of happening over here in our space. So, in so many words, the goal of this video today is I want to share with you guys what has cost me tens of thousands of dollars in investment, as well as about 1 year's time to deeply understand and navigate the network of capital, to navigate the ecosystem of capital, how capital moves, what are the trigger points, what gets capital to your fund, to your thesis, to your deal, and knowing who those players are and how to build relationships with them. So I'm going to start off with just kind of reading, literally going line by line with a few names, few titles, few things that you need to know. So real quick, the ecosystem, if you will, of capital is important because when you first start raising money, it is easy to think that the game is simple. You have a deal, you need money, and you got to find investors in your deal outside of yourself, right? But the deeper you get into private markets, the more you start to realize that the capital does not, it doesn't move randomly, if you will. It is very disciplined. I found very disciplined. Capital moves through rooms, it moves through relationships, it moves through regulation. Very, very important. Capital moves through people who each play a very specific role, if you will. And if you don't know who's who, you can waste a lot of time talking to the wrong people. I could stop right there, but I'll keep going. So let's break down the room, right? So first things first, you got the SEC. You need to be on their good side. All right. The Securities and Exchange Commission. So the SEC is the federal regulator over the securities markets. When you are raising capital through a private offering, especially under Regulation D, you are dealing with securities rules. For example, under Rule 506C, issuers can genuinely advertise an offering. I can talk about what we're doing actively with a deal, what's happening, so on and so forth about what our idea or our plan is of what we're doing. But purchasers of that deal, purchasers of this very fund I'm raising for Boone Capital Land Partners LP, must be accredited investors, and the issuer has to take reasonable steps to verify that accredited status prior to their investment. Very important. All right, that's SEC. Then you have FINRA. All right, FINRA is not the SEC. However, FINRA regulates broker dealer, and I'm going to explain that later, broker dealer firms and associated persons. When broker dealers participate in private placements, which I'll touch on as well right after broker dealers, when broker dealers participate in private placements, FINRA has rules around things like how you can communicate, supervision, reasonable investigation, and filing requirements for certain private placements. I look at FINRA, and this is just me personally, new fund manager in this space underneath a year. I look at FINRA as like your FBI. Like they are your folks. Just like that's probably a great example. This is me personally, just the way I think. I think of the SEC like rules and guidelines, IRS. I think of FINRA like FBI, like the enforcer, if you will. Like that's how I think about those folks. That's me. It doesn't have to be anybody else, but that's the way I think about it. So if just like you see on the FBI, like most wanted lists, dun dun dun. Like that's what I think about when I see somebody who unfortunately is on the FINRA list. Like, okay, cool. This is how you need to navigate with a particular firm or this space. Hey guys, this is important to know. This is important stuff to know. Because we want the right capital from the right people. Then you have your broker dealers, right? A little bit brighter. Let's brighten it up a little bit. A broker dealer is a registered firm that can be in the business of buying, selling, or facilitating securities and transactions. This is important because in capital raising, once compensation is tied to successfully selling securities, you're now in this new world. You're now in the regulated world, if you will. Before that, you just have an idea. The SEC has a guide to broker dealer registration because this is not just casual. This is not just casual networking. We're talking about moving, capital. So it's a pretty big deal. Then you have private placement agents for my new fund managers out there. Whether you have a single asset fund, whether it's your first, flagship fund, you're raising across multiple deals, or you have one deal, which is what we're doing. We're a single asset fund for this first property that we're looking to acquire here in Dallas, Texas. This is very important. Private placement agents can be your, how should I put this? They can be a absolute blessing to you, especially if you got a niche or a boutique firm, private placement agent or firm. They can be a blessing to you in the beginning with helping you with distribution and getting your deal out there to the right folks. So these are often registered representatives operating through a broker dealer. So they're associated with a broker dealer, if you will. Their job is distribution. As I said, they help connect private offerings to qualified investor relationships. That could mean accredited investors, that could be family offices, which I'll touch on later. That could be institutions or advisor networks, depending on the deal size, strategy, and the fit. um, Again, I want to harp on this one because I early on, I really couldn't differentiate between a broker dealer versus a private placement agent. And I'll be honest and transparent and say, in the beginning, I wasn't quite ready for that yet. Like I wasn't. I was building my reputation. I was building my understanding of this world. The deals that I had that I looked at, gosh, every deal I ever have underwritten in the last year has gone under contract. Um, but understanding where that fit, and that was the part I was telling there, that strategy, deal size, and fit is so important. And before knowing that yourself, I think what you want to do is come to a private placement agent ready. You want your stuff to be dialed in, ready to go. Hey, let's work together. What's your percentage? And that we'll talk about that too. Some folks take 2% of the raise. Some people can take more. Some people have a due diligence fee or like a diligence fee. I've heard 5,000 before for a diligence fee, for example. But you want to come ready and dialed in because they're going to amplify what you've already got going. So if you're not up and rolling, you're not, getting traction and stuff there. I would advise you to really dial in on what your thesis is and get some investor conversations, possibly even get some subscription docs out there. Get some real interest going because that's where somebody like a private placement agent is going to be able to take what you're doing and really partner alongside with you and take off like a rocket ship. So next, let's go institutional. So then you have investment bankers. One of my good friends, I got a few good friends actually coming from Goldman Sachs and those arenas as well. But investment bankers are usually helping companies with bigger strategic transactions. So we're talking about raising capital, selling a company, buying a company, recapitalizations, mergers, acquisitions. and institutional grade like deal execution. This is your big dogs, guys. Some investment banks also have broker dealer capabilities as well. I've actually had some amazing conversations that I've had with a few investment bankers and vehicles in the past, especially when talking on the timber side, because institutional capital, most folks don't know, but Yale, Harvard, other larger institutions actually invest in timberland strategically. So I've had some conversations with those folks, but again, we're talking about a different deal size. Remember, deal size, fit makes a huge difference. So next, we've got wealth managers and RIAs. This is another great one to know. These are the people advising individuals and families on their investment portfolios. So some are focused on stocks, some are focused on bonds, ETFs, traditional like planning, if you will. Others allocate to alternatives like private funds, private credit, real estate, or tax oriented strategies, if you will. But their job is not automatically to raise money per se for your deal. They're advising, this is important, their job is to advise their client. However, they can possibly have a really wealthy client who has an interest in what your deal is, and it might be a fit for their wealth preservation or tax strategy or tax mitigation strategy that they have in place. So, if there's a force multiplier relationship that you can have that can lead to capital, I would say a wealth manager could be that introduction. That's literally what it like. They can introduce you to the person that leads you to the capital that you need, leads you to the person who can literally write a check for your deal. So build good relationships with those folks. Next, you have family offices, which I'm just now super blessed and honored to uh, begin conversations with and introductions with. So, a family office. Family offices manage wealth for ultra high net worth families, if you will. So, some are passive, some are direct investors, some like real estate, some like operating companies already cash flowing that are going to be acquired. Some like private equity. We're a private equity firm. Some like land. Conservation is a big thing. Sustainability, energy, agriculture, tax advantage real assets. And the reason why I'm sharing these is so you can kind of see the picture of the palette, if you will. You can kind of see the different flavors that have influence with family offices. But here's the key. The key is this: they do not just invest because you have a deck. Um, you can have the best deck, pay somebody for it, looks great, whatever the case may be. When you're talking to family offices, you have to be buttoned up. And I would say probably um, the approach with family offices has been, for me, maybe even more, how should I say, probably even more, I won't say slow approach, but really walking in from a relationship standpoint, because heritage is a big thing. Heritage, legacy, um, brand, fit is huge for a family office. Because hey, let's get it. Like when you're talking to, your Chase Banks, your Huntington Bank. I know some great folks over there with their SBA program. So no affiliation with these, just shouting them out because I bank with Chase Bank and I've worked with Huntington Bank. So you have banks who they're lending capital. That's their goal, is lending capital. And creating great opportunities from a regional standpoint as well. If it's a regional bank, family offices can be all over the world. So there's fit is, I think, even bigger, not just on the numbers of your deal, but your brand and the heritage of what you're doing. So just keep that in mind. Like if you're talking to a family office, think about the Biltmore Estates, the Biltmore family. They have a family office. It's here in Charlotte, North Carolina, I think, actually. So family office, the Bezos family, the Gates Foundation, like this is that world of family offices, if you will, with those type of names. Um, so then you have your institutions. So institutions can include pensions, endowments, foundations, insurance companies. That's something I just learned like in a conversation with a buddy from California right now, who insurance company owns an insurance company. Sovereign wealth funds, large allocators. These groups usually have formal diligence processes, investment committees, allocation policies, minimum check sizes. That means they are often not the first stop for a small emerging manager, but they are important to understand because they shape how professional capital thinks. And it's if there's one way I could if there's a way that I could describe this and bounce this probably from family offices or institutions, I would say think of a cruise ship. These aren't yachts, these aren't speedboats. You're probably very likely not getting capital. And I just talked to a guy who's done over $4 billion in transactions with his firm out of Dallas, Texas. Amazing, amazing man. Someone I'm looking to build a relationship with for sure. And believer, family man, awesome man. Um, and even he was saying, he's like, hey, worked with a family office for so many years, you're probably looking at 12 months before you get a check. Like that's just the way those guys roll. Now, granted, that check could probably fund your whole deal or portfolio because that's how they're kind of moving. But that is what that diligence process kind of looks like when you're operating with those folks. And hey, yes, it could be shorter possibly, but your your horizon there is typically going to be on the a little bit of the longer end, which isn't such a bad thing, depending on what you're doing. So then you have private equity firms, which is what we are. So private equity firms raise capital from limited partners, also known as LPs, and they use that capital to buy, build, improve, and eventually exit companies or assets. In our case, these are land, ranch, tangible, timberland. These are assets, if you will. They are not the same. Some buy businesses, some buy real estate like we do. Some focus on infrastructure. I know guys who do that. Some buy energy. You've got oil and gas, huge, huge in Texas. Land again, agriculture, row crop, irrigation, row crop properties, timber, or special situations. I've seen that too with folks getting creative around like the finance space and fintech. So the common thread when thinking about private equity is that they are trying to create value add to a asset, and then return capital at exit to their investors. Then you have hedge funds. So shout out to Fund Launch, no affiliation other than I've invested in their firm, and it's been astronomical for me early on in my career as a managing director, fund manager. So some great folks on the hedge fund side. Hedge funds are interesting to me. Hedge funds are pooled investment vehicles, but they often operate differently than private equity. Here's how. Many hedge funds trade public markets, credit, derivatives, currencies, commodities, or event driven strategies. Some are highly liquid, some are more complex. But again, they are part of your broader capital ecosystem, if you will, and hedge funds play a big role in their space. I have personally seen folks that are on that side who have, I believe it's called a Series 6. I think there's a Series 7 as well. I see a lot more of those folks who are licensed advisors as well. I want to say in that space who are encouraged to go that route in their space on the hedge fund side. So just me personally, friends I know, I've seen that more on their side. Then I want to talk a little bit about this one because it's important, and I've been asked this a few times in having conversations with various folks from these communities, and that is a SPV or a special purpose vehicle. All right, an SPV is usually an entity that's created for a specific investment or transaction. Instead of raising a blind pool fund, which is kind of like, in my opinion, a hedge fund, like blind pool of money and fund to go and invest in different things. Um, w- with an SPV, it's more so where investors commit to a broad strategy. You have a strategy, you have a buy box, if you will, and an SPV is often tied to one specific deal. Now, that is why you hear people talk about single asset funds, which is what we are, a single asset fund. And specifically in the land, we're kind of niche in the land space. So a single asset fund, private equity fund like us, deal by deal investing are project specific syndications. So in so many words, I would say we're private equity firm, single asset fund for this particular first deal, and we have a specific strategy, but we're a little more robust than just your traditional LLC, open LLC syndication, which I'll talk about next. So syndications, okay? A syndication is when a sponsor pools capital from multiple investors to acquire or execute a deal. Starting this off, just think about a flipper. Like that's the easiest way I can explain this. I've got plenty of friends who do really well with fix and flips. Doing now getting one of my buddies getting into multifamily. They just got like a 98 unit deal entitled. So shout out to him. One of my good friends from MK Developments. One of my best friends. But think about this syndication. So in that kind of world, this is common in real estate. And like I said, getting into like your multifamily, maybe your duplexes, uh, single family home, subdivision type of deal, right? So it's common in real estate, private credit. Sometimes folks use hard money lenders. They go that route as well. DSCR, yeah, DSCR, that kind of world. Operating businesses and other private market opportunities. The sponsor usually finds and manages the deal while investors participate as limited partners or members. And typically, I see it as members very often. So, in so many worlds, what do we have here? Around all that, you have the professional infrastructure. So you've got folks that are security attorneys, you got fund administrators, you got CPAs, you have tax strategists, you have investor portals. And investor portals are getting really robust, providing the rails, if you will, to make sure everything is on the button up. Documentation is in place, making it super easy. I actually had a meeting with some folks yesterday. I cannot think of the name right off bat. I can't think of the name right off bat. We got to follow up next week. But they have a platform that is so dialed in. I promise you, it is harder to buy a t-shirt off of Amazon than it is to invest on their platform of $100,000 or more. They have all your documentation in place there. They have the pitch deck or the offering for the project. I mean, their website is dialed in, and that would be an example of an investor portal that it just makes it super seamless for investors to come and see what it is that you're doing, and yeah, so do subscription docs and all the paperwork that's needed to get in on a deal. Compliance consultants, you have those folks. Like we have a real estate attorney that is on our advisory council for everything that we do. You've got custodians, escrow providers, transfer agents, due diligence teams, you name it. So here's the biggest takeaway that I want you guys to have from this video, and I pray that this video brings you guys a lot of value, because it's one thing to know the players, it's another thing to know how the players work together um, for your good or for your not so good if you don't know the rules. So biggest takeaway: not everyone in the capital ecosystem does the same thing. Everyone does not do the same thing. Some people advise capital, some people raise capital, some people regulate capital, some people allocate capital, some people provide technology around capital. That's what I was talking about before with those folks with the portals and the platforms and the technology. Some people structure the paperwork. Some people actually bring investor relationships like the wealth managers that I mentioned. Absolutely amazing. And you will learn a ton. If you get hooked up with I've got some great folks over at Morgan Stanley that have been amazing for me and my family's portfolio over the past couple of years. But I can say if you get hooked up with a great wealth manager, they are a wealth of knowledge and will teach you so much, just in general. No affiliation there, other than like I said, I've worked with them personally for our own portfolios over the last couple of years. Really great. And what's important about that as a fund manager is once you understand who the players are in the ecosystem, you stop asking the wrong people for the wrong thing, um, which will impact what rooms you show up in, what networking events, what things you show up for, and the things that you may not, or you might say, not quite the best fit for me. And that was ultimately what this video was about. I am huge on continuing to share my journey. I want to be able to come back after we close this first fund and be able to share with you guys just the blessing and the journey and get started on our first project and new partners and those type of things. But I think it's so important to take these moments along the journey, these ahas, like, oh man, okay, now I understand that these things along the way, and that's ultimately what I invested, a significant amount of not just capital but time and energy into learning this world, into being able to bring what I believe is institutional level or institutional grade capital to the outdoors, to the land space, because we have something that's so valuable, that continues to appreciate, that is tangible, is legacy and generational wealth building that can be passed down, in a matter of stewardship and a matter of sustainability and ecological impact and what we do. That I want people to be able to take part in that. I want people, accredited investors, of course, as we talked about today, but I want folks to be able to have the great experiences of seeing the sunrise, hunting your first deer with your son or your daughter, enjoying the outdoors, as we have in our actual LPA agreement. We literally have a lease where you can enjoy the property as if it's your private hunting club, if you will, hiking, biking, cycling, rafting, fishing, whatever, in what we do. And I think that makes us unique. I think the story that my personal family and stewardship has on the properties that we own and that I share with my other heirs of the property I inherited in Eastern North Carolina. That's what makes us different, man. You can see numbers on a spreadsheet. You can talk to folks with any deal anywhere, but I think what makes us special and unique is the connection in general. So, in so many words, pray y'all had a great time, and that this video is helpful for you. I would say come back to it anytime you have questions, and you're growing and developing. And until next time, I wish you the best. Hey, if you're interested in what we're doing at Boone Capital, feel free to leave a comment, give me some feedback. You can schedule a call at boonecapital.co. That's boonecapital.co. This first offering is for accredited investors only. Or you can shoot me an email. My email is kobe@boonecapital.co. Would love to have a conversation with you. And until next time, God bless.